Today, we are going to talk about the quality of trade rankings. And if you're someone that's struggling with your trading, especially with being consistent, this is something that you can implement that will probably help you out. Now, before we hop in, this is a video episode, so head over to YouTube or Spotify if you want to watch it. And also, because I don't think I've done this on YouTube yet, we are approaching 3 million views for the Trading Coach podcast, not counting you guys on YouTube, but just on the audio platforms. So thank you so much for supporting the show and keep listening to past episodes that you may have missed. That way we can reach that milestone. No specific reason, just a really cool number. So let's talk about these quality of trade rankings. I want to give you a little bit of background information first. The idea came up because I recently read an article about what they're doing over here in America when it comes to youth soccer as far as reevaluating our players. And I'm a big soccer nerd, Everton supporter, which I can brag about now for the first time in I don't know how many years. And both my kids play at a very high level as well. So I'm consuming as much soccer as I can consume. My streaming costs are also through the roof because of La Liga and the Bundesliga and the Premier League and MLS and all these different sources you have to pay for. But the problem that we have in soccer here in America, because obviously we are not very good, is that we do a very poor job at developing talent. So they wanted to relook at how talent is assessed. And pretty much here's what you see in youth soccer, right? In good old-fashioned American bully ball, coaches tend to pick, and we're talking like at the ages of like 12 and under, right? The most mature, people that have hit puberty, the most strongest, the tallest, the fastest kids, because those kids typically dominate, right? And what you see in many of these games is that you'll have teams that are actually better than some of these other teams, but if your team has this big, strong, fast player, he'll just run through everyone and there's just nothing you can do about it. The problem is when this big, fast, strong, unskilled player moves up to a level where everyone is big, fast, and strong, they don't have the skills to maintain at that level. And that's why we see a major drop off when we get to kind of like the professional level here in the US. Now, the cool thing is I actually have experience with this because both of my kids' coaches are European, and they coach our team in a completely different way where the focus isn't on winning games, the focus isn't on scoring as many goals as possible. It is about playing the right way. And as a coach myself and as someone who is a trader who focuses on process over outcome, which is what we'll get into later, I really appreciate that because I can see the big picture. They're learning to do the right actions, the right tactics now. And it doesn't matter if it works or not, right? They're learning those foundational elements that will allow them to succeed later. However, not all of the parents agree because sometimes we're going to lose a game by 10 goals because some big, fast, strong kid just ran through us and stole the ball and scored every single time. And it's really hard to make that disconnect, mainly because we're trained for our entire lives to think that results are how we should be judged, right? Think about school, think about job, right? It's always results. If you get the results, it means you're doing good. If you don't get the results, it means you're doing bad. And there's nothing else being taken into account. So the thing with this MLS quality of play rankings is they're still going to have regular rankings and tables and whatever like that, but they're creating a new ranking system based purely off of how you play. So they're looking at different elements of attack, defense, are you in the right position, are you making the smart play, and grading a player and grading a team off of that. That way it encourages doing more of the right thing. And the goal of these new rankings and evaluation process is to promote big picture, long-term development and shift the focus away from short-term results, right? Very similar to trading where everyone is worried about short-time results. What was this trade? Did my most recent trade win, lose? Where what do we preach at tier 1 trading all the time? It's all about the law of big numbers. It's all about bigger picture. What did you do at the end of the year? What did you do at the end of 5 years? Compounding. And that's how you really measure your success. A cool quote that I read from an article said, positive tactical intentions will be encouraged, even if the execution isn't perfect. And I love this because this promotes the player trying to do the right thing, right? Even if it doesn't work, even if they try to make the right pass and the ball gets stolen, right? You're applauding the effort. Again, my kid's coach does that all the time, where my kid will try to make a pass and maybe it doesn't get there because he can't kick it hard enough. Instead of yelling at him and saying, "Oh, Cameron, you turned the ball over. What are you doing, you idiot?" Right? he will actually be like, good idea, great idea, right? It's the process over the outcome, and it's beautiful to see. As a result of this, what it does for the player is it gives them courage, it gives them motivation, right? Many times we take action, including in the markets, we take action where we're not actually trying to do the right thing. We're trying to avoid the bad thing. We are, you hear it in sports all the time. You're playing not to lose. Think about it like if you ever saw a trade set up on your chart and, it's the perfect trade setup. It meets all your rules, but you're kind of hesitant about taking it. Well, why are you hesitant about taking it? Because you're afraid of losing, right? The fear and potential pain of losing a trade is outweighing the motivation of winning a trade, right? So you're basing your action based off of that fear. You're afraid to do something because of a potential future result, where it should be shifted. If the right setup is in front of us, we should be encouraged to do it no matter what the result is. And that's what they're trying to encourage with these rankings. Simply put, don't be afraid of making mistakes and try to take the right action. So I already mentioned how many of these elements relate to trading as well. And what inspired this podcast was actually a message that I got on Instagram. It was a trader saying, Akil, blah. Can you give me 2 or 3 tips about how to develop habits that will help me become more disciplined? And the number 1 tip that I had for this guy was to be process driven and not results driven, right? You hear us say process over outcome. And what this means is that you want to consistently do the right thing. And remember that right and wrong isn't judged off of your result. If you take a trade and it loses, that wasn't a bad trade. If you take a trade and you win, it wasn't necessarily a good trade, right? There are 4 types of outcomes out there. There are winning trades that make money. There are losing trades that lose money. There are good trades, and then there are bad trades. And we typically associate a good trade with one that makes money and a bad trade with one that loses money, but that's being results based, and that's not necessarily the case. The thing about trading is we can do everything right and still be wrong. We can do everything wrong and still be right. So we can have a good trade, aka a trade that meets all of your rules, and it can lose just because no trading strategy wins 100% of the time. You're going to lose. It happens. On the other hand, you can have a bad trade, something where you just close your eyes and hit the button. I've had trades actually in the past where I have bought instead of sold, right? I just dumb rookie mistakes. I hit the wrong button and now I'm going in the opposite direction. I wake up in the morning and I'm like, oh my gosh, the trade went down. I'm going to be stopped out for all this money. And I'm like, oh, wait a minute. Ooh, and I had massive wins because I just made the mistake. And back then I would count it as a good trade because I made money, but it was a horrible mistake. A mistake that if I made on a consistent basis would lose me lots of money. But I would judge myself off of the outcome and not the process. So it is shifting that mindset to trying to get 100% good trades. And again, thinking about the law of big numbers, understanding that yes, we want to focus on the result, right? I'd be lying if I said, hey, we should be trading and not thinking about making profit, or the goal shouldn't be to make profit. The goal is to make profit. We want to make as much money as possible. But what we need to do is we need to peel back a layer of that onion. That seems like a horrible idea. You would just cry more. Why peel? That's bad, right? The more you peel, it gets stuck under your fingernails and you smell and you scratch yourself. And that's the more I do this, the more I come up with analogies that are just really, really bad and make no sense historically. But we're going to peel back a layer of this onion because that's what we're going to do. We're already down there. And instead of just focusing on results, profit, because yes, we want to make profit, we need to go one layer deeper. There we go, onion brain, right? And think about what is the action that we can take that will then cause us to make the profits, right? We want to make the profits, yes, but we can't go into it saying, got to make profit, because what does that actually do? Everyone wants to make profit. What are the actions that's going to allow me to make the profit? And the actions are consistently following your trading plan. And your trading plan, hopefully if you've done it the right way, has a statistically proven edge that is testable, verifiable, repeatable, and you've back tested it to prove that fact. So now the question is, Akil, how the hell do we do this? How do I make that shift? Well, it's very, very hard. Like I said, you've been ingrained for however many years that you've been alive to think a certain way. And if you know anything about neural pathways in the brain, we can rewire them. Yes, good, but the older we are, the harder they are to rewire. But it is possible and it takes consistent action. Something that you have to do is you have to fully dedicate yourself to that process. And something that we do is called the quality of trade rankings. It's not actually called that, but after hearing quality of play, I just called it quality of trade because it sounds cool. But this is all of your post-market review. This is all your post-market journaling. So just like how the players on the pitch are going to be defined or evaluated based on attacking, based on defending, based on overall positioning and decision making, we want to find 3 categories in which we can grade ourselves on how we're doing in the market, with the kind of the comparing factor being the rules of our trading plan. So it's going to be analysis, it's going to be execution, and it's going to be management. So analysis, number 1. Did you analyze the market the right way? And again, this is journaling. So this is post-trade. When your trade is done or when you're doing your review, this is what you write in your journal, whether it's an online journal that you found, whether it's an Excel spreadsheet with a note section on it, whether it's a physical journal. I've got a bunch of them around somewhere because I got a million of them, whether it's a Word document, right? Whatever you're using to journal and evaluate yourself, this is where you do it. So the first one is going to be analysis. How did I do with my overall analysis? When I first started analyzing the market, did I do everything correctly? Did I look on the right time frame? Did I miss any levels of structure? Did I forget to use a tool that I was supposed to use, right? Was I correct in analyzing the market? And remember, correct has nothing to do with the trade going in your direction or not. It's correct in, did you follow the process, right? If you're following a process in trading, you should have kind of like a checklist of what you're doing, right? Start on this time frame, look for this, then look for that, and then it all lines up to you taking the trade. So did you do everything correctly, or did you make a mistake? And what you can do is you can kind of give yourself a grading scale as well. You can use percentages. You can use 1, 2, 3, meaning 3 was perfect, 2 is you missed something, 1 was horrible, you did nothing right. However you want to do it, whatever makes most sense for you. But you want to make sure you grade yourself, that way you can quantify it later and kind of make it a game where you're trying to up that grade, weekly, monthly, quarterly, whatever it may be. Second one is going to be execution, right? Analysis is great. Analysis is probably the easier part of trading. The hard part is executing the trade, because that's where the good old psychological demons come on, right? The little people on your shoulder going, man, you shouldn't take this, it's gonna lose. You sucked the last time, you'll suck this time. The voices are bad, whatever. You get what I'm saying, right? Those consciences both telling you negative and positive things, right? Did you execute the trade correctly? When I say execute the trade correctly, I mean, did you place the right order, right? Don't be like me and place the wrong order. Did you place the right order at the right time? Did you wait for your specific trading signal, the thing that you need to take the trade? Or did you enter early? Or perhaps were you a little bit fearful? Did you enter late? Is your stop loss in the right place, right? Is your target in the right place, right? Those are all the execution, entry, stops, and targets. Did you do all of those correctly and grade those selves the same way you did the first one? The last one is management, and management is split up into 2 sections, right? There is the technical side of management, and then there's the emotional side of management. The technical side is like an active trade management. Are you supposed to roll stops? Are you supposed to, I forgot this one, the last one, execution would be using the right position size as well, right? We make those mistakes as well. We do miscalculations and whatnot, so that's a good one to throw in. Or maybe put that in its own category, risk management, if you want. But management is, did you do the right things? Did you place your stop loss in the right location, and did you roll it when price was going in your direction? If price was going completely against you, did you keep your stop there and brave it out? Or did you move it back to try to, did you sniff the hopium hoping that price wouldn't get it, right? That would be a negative management. Same thing with profit targets, right? Did you adjust your profit target correctly if price hit it? Did you move your profit target? Did you take profits early because you were scared that the market was going to go against you? Did you move your profit targets down because you wanted to be greedy and get more off of the trade, right? All of those things, stops, targets, active trade management, that's going to be on the technical side of management. The emotional side, this is where you got to get a little deep inside your journal. How did you manage your emotions? This one's not necessarily, I guess it could be gradable. Did you make a mistake or didn't you make a mistake? But this is more about insight in figuring out what your triggers are, because we all have emotional triggers, right? I know my emotional triggers, and therefore I set myself up to be in situations where I can avoid those emotional triggers. Denise Scholl taught me a lot about not being robotic. For the longest time, because my mentor was military, I thought we just had to be robotic. I had to be a stone cold killer, be emotionless, right? Which wasn't very hard for me because I don't really have a lot of emotions to begin with. But it's also very, very difficult because we're fighting against something that makes us human, right? We human beings, we naturally have emotions, so we're trying to do something unnatural. The difference is disconnecting from these emotions. How can we not allow those emotions to affect our decision on the chart? And the easiest way to do that is to not put ourselves in that situation. Me and my wife have been watching this show called Resident Alien recently, which is quite funny. If you watch the show, you get it. If you don't, I just sound like a weirdo again. But what else is new? 3 million views. You love this weirdo, right? But in this show, the mayor of the town, he has like it's a small town, they all group each other, right? And he has like this ex-girlfriend, and he's married, he has his ex-girlfriend, and his wife's out of town, his ex-girlfriend, who still kind of likes him, is in the house, and they go up into the bedroom to smoke some weed. And like me and my wife are shouting like, no, we already know what's going to happen. We know what's going to happen. It didn't happen. But again, he put himself in a situation where he could have happened. Something bad could have happened. If he would have just avoided her, like ran away when she came, he wouldn't have even had that conflict or that desire, that whatever you want to call it. Anyway, it's a good show if you guys watch it. You know I'm in Aliens anyway, and it makes us feel bad about us as humans. But it's a good show. It's a funny guy. He makes funny faces. So the emotional side of this post-market review is, did I make any mistakes? But more so, what did I feel? What going into the trade? Was I calm? Was I nervous? Was I totally freaking out while the trade was in progress, right? Was I calm? Was I nervous? Was I totally freaking out after the trade was done, whether it was a win or a loss? How did I feel? Was I really, really super over emotionally happy because it won? Was I depressed and sad and upset and rageful if I lost, right? These are all things we need to track because it tells us a lot about ourselves. And as we spoke about in the podcast before, a lot of the times our mistakes aren't made by the actual trade. Our mistakes are due to a previous trade. So if you're getting all pumped up and excited for a win, you're over emotional, and you find yourself making a mistake on the next trade, maybe it was because you were too pumped up. If you find yourself revenge trading or staying out of a trade because you're fearful, maybe it's because you were too depressed, right? So if you can start noticing these things, you can start putting in things where it's like, hey, once my trade is over, go hit the gym and lift and don't come back to the charts for another 30 minutes or something like that. Or if you're feeling nervous prior to the trade, you know that, hey, I can't enter trades when I'm feeling this way because I always have FOMO and I always enter late. Or if you're getting all worked up while you're in the trade, you know, hey, if I'm in a trade, hit that little X button at the top, close the screen, and get away because I'm just going to freak myself out, right? These are all the small clues that we can learn about ourselves that's going to help us eliminate those mistakes in trading. And these are process-based things that we need to fix if we want to put ourselves in a position to be consistently profitable traders in the long run. Hope you enjoyed the show. If you have any other tips of stuff that you do, feel free to leave it below in the comment section. It's very helpful to our traders. You can shoot me a message on social as well. Also, again, help me reach those 3 million views. Go back and listen to past episodes. We're almost at 1,200, and I doubt you have listened to every single one. If you did, thank you. But if not, go back and find a fun one. Give it a listen. Support the show. Help us reach 3 mil. And until next time, plan your trade, trade your plan. Take care.